I hope everybody can hear me. If you can hear me, give me a 1 in the chat box. Give me a 1 in the chat box. If you can hear me. Great. We've got 6 people at the minute. Can we wait just a little while? If you know anybody not on this call, can you just invite them quickly? Then we can start rolling. All right, I'm just going to go ahead and start because I've got some few things I need to cover to actually complete what I call the basics of smart money concept. So literally, some of you might know me, others might not know me. My name is Francis, once again. And my main strategy that I trade is the harmonics. I recently found the power of smart money and added it to my harmonics. And that is currently what I am doing and how I am pulling my trades every single day in the market. I think Stacy is on the call. Stacy knows about what I'm talking about. So if you're here, I can assure you that you are about to learn something different that is going to open your understanding of how the market actually moves. Is there anybody on here who is a beginner who's just started in AMA finance, who's just started in IM? Anybody here who's a beginner? Give me a 2 in the chat box if you are. If you know nothing at all about chatting, marking up a chart on your own. I think we all know what we're doing with the market. Okay, so I'm gonna start rolling. I'm gonna share my screen and we'll do some few stuff. I hope everybody can see my screen. Give me a 1 if you can see my screen. Give me a 1. A 1 if you can see my screen. Good. All right. All right. All right. We're going. Good. Good. We're rolling. People are still jumping on. However, we're just going to move. We're just going to move. We're just going to move. I won't be wasting so much time waiting for people because we've got some few things we need to do. I'm going to take a clear chat and then we'll do some learning and some markups as to what I'm talking about. I might be talking very slow. That is not usually how I speak. But then I want every single person to understand what I'm about to teach is very, very important. That is the reason why I'm going to take it very, very slow. I'm going to speak very, very slow as well. If there is anything you do not understand, you can unmute yourself and then talk to me, or you can as well put the question in the chat box and then I will take it from there. Okay, let's roll. Oh no. I need to admit every single one of them. Oh no. All right. So what we're about to talk is the smart money. And then the main points that I want to cover. The main points that I want to cover is a gap in price, an imbalance, an institutional candlestick. Directional bias. How to trade by the bank. So these are the things we're going to be talking about today. I'm going to take it one after the other. If there is any question after I'm done talking about any of them, I am going to show you on the chart what they mean. So if you're taking notes, this is what I want you to be noticing. This is what I want you to be writing down. I'll be going through them one after the other. Okay, so somebody might be asking, what is smart money? What do we mean by smart money? Smart money is a concept that we use to trade. It signifies how the banks are jumping in and out of the market. It's not on the call. I think so. Are jumping in and out of the market and then pushing price how they want the market to move. The reason why they have the ability to push price how they want it to move is because they are putting into the market big lots of money. Assuming you and I on this call right now, we want to trade, what we're doing is literally putting in 50p, 100 pounds, 200 pounds, 300 pounds. This monies we are putting into the market, it's really not doing anything. We don't really have the effect of moving the market the way we are seeing candlesticks being formed in and out of the market. Instead, the banks have the power to do this. One trade that the banks put in this market is going to move the market in a different direction or in a certain way that you might not understand. But with smart money concept, with what I'm about to talk about, you will understand the reason why the banks are doing that and why they are pumping money in such places. Number two, the gap in price. If I talk about gap in price, sometimes during Sunday nights around 10 a.m., 10 p.m. when the market open, we usually realize on some of the charts that there is a gap, price open at a different place in the market compared to where price was sitting when market closed on Friday night. Am I making sense? Give me a 2 in the chat box if what I'm saying makes sense. Sometimes, Lenny sees it, Ashley sees it, yeah, Dan. All right. I think people are following. Most of the times on Sundays, you realize that the current price that price closed at on Friday, we're gonna see price open up at a different side or a different area in the market. And that is what we term as a gap. If you're taking notes, I am gonna wait for you to take your note, then I'll continue. So once this gap happens, the difference in position from the closing price of your Friday and the opening on the Sunday evening or Sunday night, that is what we call the gap. It does not happen every time, but sometimes it does happen. I'm going to show you an example of it if I can on the chart. Okay, so what is an imbalance? Imbalance refers to the difference in price of sellers and buyers. The difference in price of sellers and buyers. The market is a competition between sellers and buyers. So when the sellers are doing more than the buyers, we term this as an imbalance. Or when the buyers are doing more than the sellers, we term this as an imbalance. Vice versa, we're going to consider both of them. I'm going to show you an example of where in the chart this imbalance is happening. Okay, so what is an institutional candlestick? Institutional candlestick refers to the last bullish or bearish candlestick before the down move or the up move. Does that make sense? Give me a 3 if that makes sense. The last bullish or bearish candlestick before the down or the up move. I hope we're writing something. It might not make too much sense to you right now, but when I start showing you off the chart, you are going to understand why I said the last bullish or bearish candlestick before the down move or the up move. But yeah, if we are done with that, then I will jump straight on the chart and start showing off some of the things I'm talking about. I'm going to take US 30. I'm trying to show you where possibly gaps are being formed on the market chart. Can't find any down here. Sorry, I've got so many things on my chart. But yeah. Let's go on the DXY. I think there is usually gaps in there. All right, look in this area. How many of us can notice this area? Give me a 4 in the chat box if you can see that. Give me a 4 in the chat box if you can see that. I think everybody should see this. I don't even have to talk about it. Everybody should see this. It's so clear, the area that I've put my rectangle. You see, this was on the 6th of March, and when market opened on the 8th of March is a weekend, right? So the Sunday night, when the market opened, it opened creating this area of a gap. This is what we call gap in price. It's what we call gap in price. All right, so now the next thing I'm gonna talk about is an imbalance. I'm gonna use the same chart to, why is that? Okay, so the reason why these gaps are being created is because maybe during the weekend, there was a fundamental news stating that the dollar currency, this is the dollar currency that I'm looking at currently. There was a news in the weekend stating that the dollar currency is losing its value. So automatically on the chart, when they come back, they are going to price the chart according to the news that happened in the weekend, thereby creating this gap. I hope that makes sense to you, Beck. I hope that made sense. Yes, okay. So when we had a bad fundamental news during the weekend, it's going to affect the market, but we will not know why, because price is not moving in the weekend. So when price begin to move on the Sunday evening when market opens, immediately we see the effect of what happened during the weekend. This usually happens when Donald Trump begins to speak during the weekend, speaks anyhow. It affects the market in a certain way that immediately the market opens. It creates these gaps. Okay, so somebody might be asking, what is the use of this gap? I want to cover the imbalance, and then I'll come back to explain the uses of this gap, why I'm talking about these gaps. Okay, so what is an imbalance? The difference between buyers and sellers. The difference between buyers and sellers. For every candlestick that we have is a pressure point between sellers and buyers. And currently I'm looking at the 2-hour time frame. And I have a perfect example of an imbalance right here. Can we focus our attention to these candlesticks right here? Can we do that? Can we do that? Give me a 1 if we can do that. Give me a 1 if we can do that. Let's just focus our attention to these 3 candlesticks. These 3 candlesticks right here. There is something different about this zone. Can somebody point it out to me? Compared to the rest of the candlesticks around here, there is something different around this area. That is the reason why I've pointed it out. In the chat box, can anybody say open, close, price? Open, close, price. Yes, you have said something, Stacy, but it's not enough. It's different. Okay, it's different. It's different. It's different. I'm still not catching it. Will it make sense to somebody who's never known this before? No. Okay. So now I'm going to take this off and show you what I mean by a gap. Yes, Andre, you're right. There is a gap. And the reason why it is a gap is between this candlestick and this candlestick is being separated by a big price action. Between 2 candlesticks is a very big price action separating them. So in this case, this wick of this candlestick is not touching that wick. Is anybody understanding this? You can type yes in the chat box if that makes sense. The wick of this candlestick is not touching the wick of that candlestick. All right, we have how many people? 16 people. I need every single person to understand this. If you don't, feel free to tell me no, and I'll explain it further. Yeah. How many have we got? 1, 2, 3, 4, 5, 6, 7, 8. How about the rest of the people? How about the rest of the people? Can anybody see this? Can everybody see this? The wick of this candlestick is not touching that. Let's look around this area and see what's happening. This wick is touching that wick. This wick is balanced by that wick, right? But then in this case, that wick is not balanced with that wick. So we can see from there, if we draw a horizontal ray, we can see from here that there is a gap that is being created in price. What that means is during this price action, during this 6-hour period, we're looking at the 2-hour time frame. During this 6-hour period, the buyers in this market were more than the sellers, and the sellers could not balance the amount of movement in the market. I hope that makes sense. Give me a 1 if it makes sense. Give me a 1 if it makes sense to you. During this period, the buyers were a lot stronger than the sellers, that the sellers could not balance out. Good, good. So now we understand what an imbalance is. We can have the same thing, we can have the same gap created on a bearish candlestick. That is what I want us to understand. I'm just using these candlesticks as an example, but then we can see this in the market every single time. What does that mean if we see this in the market? If we see these things in the market every single time, it is a point of interest. Take note, it is a point of interest. You want to be looking at this area and see what price does whenever price come back there. I hope we're following. Whenever price come back around this area, we want to see what price does. It means that the banks has to come back to close out this gap that has been created, this imbalance that has been created in the market. The sellers has to be able to come back to mitigate the buyers before price can do what it has to do, which is going up in the direction that we have. I hope that makes sense. Give me a 2 if it makes sense. Give me a 2 in the chat box if that makes sense. I'm going to take it very slow. I'm going to take it very slow because I want every single person to understand. And in this example, it was a perfect example. Look, the buyers were able to push price up, but then immediately the sellers came in. They brought price back down into the gap, mitigated the buy imbalance, and straight away price went up. This is what we mean by imbalance in price. Imbalance in price has nearly the same functionality as gaps in price. But then we have to understand where in the market are gaps being created. As we understand where gaps and imbalances are being created, we should know that the market will always give us a sign, the reason why they want to come back there, the reason why the banks would like to come back into these areas. So for a smart money trader, you want to take note of gaps and imbalances as your point of interest. Let me label it. So in this case, this is a gap. And that is an imbalance. When I'm done with this, I'm going to post this in the chat if anybody's going to need it. So yeah, this is a gap and that is an imbalance. What else did we talk about? What else did we talk about during our notes? We said we were going to talk about, oh, come on, where is it? Sorry, I can't find it. Can somebody paste the notes that I placed on the chat for me quickly? Then I'll know where I am and where I'm heading towards. Can somebody paste it in the chat for me quickly? Institutional candlestick, thank you very much. Institutional candlestick. Okay, so what is an institutional candlestick? What is an institutional candlestick? Does anybody know what we call an engulfing candlestick? Give me a 1 if you know what an engulfing candlestick is. Give me a 1 in the chat box if you know what an engulfing candlestick is. Oh, come on. 15 people in the chat. It can't be just 3 people. No. All right. Somebody says no. No problem. No problem. I'll go through it. Let's look at the chat and see if we can find an engulfing candlestick. All right. Who sees what is happening right here? Is that an example of an engulfing candlestick? Yes or no? Let's be interactive. Let's be interactive. Yes or no? Is that an example? All right, so Beck, do you understand this now? I think you're the only one that said no, so I want to take my time and then show you. Yes, okay. And the reason why we say this is an engulfing candlestick is we had the bearish candlestick formed and then a very big bullish candlestick. Messiah. All right. Sorry, I'll take that one instead. Take that one instead. Sorry. Okay, so this is what happened. We had a bearish candlestick, and then we had a very big bullish move that covered the whole of the bearish candlestick. And that makes it an engulfing candlestick. And once this candlestick has been engulfed, this candlestick automatically becomes my institutional candlestick. Why? Because this is where the institutions decided to sell and immediately bought price up. Does that make sense? 1 in the chat box if that makes sense. This is where, in this candlestick, is where the institutions decided to sell down and then buy up. Hence why we have an engulfing candlestick. So some of us, we are already trading like the institutions, but we do not know why these candlesticks are being formed. We do not understand why this formation in the market. We do not understand why this is happening in the market. The banks decided to sell off in this area and immediately bought price into the direction, into the direction where they want to go. Hence why we sometimes classify this area as a reversal pattern. It's not just a reversal pattern. Look what happened. Most of the time when engulfing candlesticks forms, they create a gap in price. Can I say this area is a gap? From what we have just learned, can I say this area is a gap? Yes or no? Oh, let me know. Let me know. It's too many people in the chat. Too many. I'm going to start mentioning names. I haven't seen nothing from Becky. Dan. Dan. IBS. I'm going to start mentioning names. Oh, no. Philip is here. I see you, Phil. Oh, all right. All right. I get it. Yeah. So what I'm trying to say, all I'm trying to say is this wick is not being balanced by any wick or a candlestick body. And that makes me know that this engulfing candlestick has created a sort of imbalance. And that is the reason why I'm going to take notice of this institutional candlestick and the gap together. Let's go on the left side and see what happened when price came back there. Have you realized that this place, sorry, I'm juggling two hypotheses. Oh, bedtimes are trying to listen. Sorry. No worries. Okay. Have you realized how price came into this area, acted as a support, and price bounced off it? How many of us can see that? Yeah. Yep. Yep. This is what we're talking about when we say smart money trading. Look at the way price went up, came back into that area and acted as a support. It bounced off it, and then it bought. Price went straight up. You see, how would you know if this area is going to be a support if you don't know about smart money? So you probably have a trend line lying up here. Look, this area, thinking that is a support area, is a resistant area. So when price gets there, it should be able to hold. This is the reason why today I'm telling you this gap is the reason why price got there and it had to move up. For every single body that trades trend lines, for every single body that trades resistance and support, look wherever on your resistance level where price decided to respect the support, look around there and see if there is a gap or an institutional candlestick. How many of us has realized that? Have been able to realize that? Maybe you trade support and resistance. You trade, oh, Phil, I know you know that, Phil. Every single time, you can go and backtest this. Every single time you're trying to trade support and resistance, look on your left side and see why price bounced off. There is a gap or an institutional candlestick. This is what we call the smart money. Okay, so you might be thinking of trading, but you do not know where to enter this market. Yeah? Now I'm going to show you with the knowledge of an imbalance, with the knowledge of a gap, and with the knowledge of what I've just done, institutional candlestick, we are going to combine them and see what the market does whenever price gets into these zones. All right, I'm going to use this area as an example. Can I say there is a sort of imbalance around this area? Can I say that? Yes. Stacy says yes. Yeah. I have few people following exactly what I'm doing. So that wick of this candlestick is not touching the other wick. It's separated by a high volume of bullish movement. Now I want us to go to the left-hand side and see what happened when price got to that area. What happened in this area? Anybody can tell me in the chat box what happened in this area? Reversed, absolutely. Look, they had a very strong selling power. And the reason why they had a very strong selling power is just in order to fill the gap and then move in the opposite direction. So this is what we see. We saw the gap from here, but price got there and it reversed up. The reason is just because we saw this gap right here. You see, resistance and support traders will have this area as their resistance or whatever it is. But it's not going to be as precise as me talking about the gaps, because why? They are just going to fill the gap and go away. Sorry. They're just going to fill the gap. Oh, okay, penny just dropped. Yes, it will drop. It will drop. And that's just the point. Immediately you see this gap, all you're trying to do when you mark on your chart, how far back do you look for gaps and institutional candlestick? Okay, So Dan, what I do is I'm going to do a top-down analysis. We have 4 minutes on this call right now. When I'm done with it, I'm going to do a top-down analysis using smart money concept. I'm going to close this call when it gets to 1 minute, get back onto the Zoom link in the group and jump back on, and I'll start from scratch a top-down analysis, how I trade using the smart money, if that makes sense. Give me a 2 if you're happy. We do that. Give me a 2 in the chat box. If you're happy, we go through a top-down analysis using the smart money. Yay, people are fired up. People are fired up, happy, getting ready for something. Okay, so now I'm gonna, oh, sorry, I have lots of things in my chart. I have lots of lines on my chart. Okay. Can I just close this call immediately? Can everybody jump out of this call immediately? I'll reopen it and then we jump back on, if that makes sense. Yeah? All right, see you in about 2 minutes. Everybody, see you in about 2 minutes.